Good day, ladies and gentlemen, to the Nickel and Canada Nickel update on Commodity TV. The nickel price has suffered a lot in recent years. The market is still in oversupply. The only question is, for how much longer? This is mainly due to Indonesia. The country started producing stainless steel called STS in 2017 and very quickly became the second most important nickel consumer worldwide in 2020. It consumed over 210,000 tons, more than Japan. Domestic demand grew strongly to 383,000 tons in 2021. Due to import restrictions in several countries, this fell again in 2022 and also in 2023. Consumption is roughly estimated at 390,000 tons in 2024 and is expected to increase by 9% in 2025, according to the World Stainless Steel Association. Indonesia also wants to establish its own battery industry and electric car industry. Last October, a joint venture was found for this purpose with the Indonesia Battery Corporation and Contemporary Amperex Technology, or shortly named CATL. The aim is to produce battery cells in one factory, and CNG.V announced that it plans to invest $10 billion in the country. This is in line with a number of other announcements that the value chain in the country is to be massively expanded and end products are to be manufactured using domestic nickel. On the one hand, we think that Indonesia is establishing itself as the new NPEC in nickel and is trying to dominate the market. On the other hand, it is again creating dependencies in the nickel market by keeping prices artificially low and thus flushing other producers or prospective producers out of the market. However, a North American industry can put up with this just as little as the European Union. All the more important is a new long-life nickel source that also produces nickel green, meaning CO2 neutral, and can also store CO2 from outside, meaning net zero production. With its Crawford project, Canada Nickel is planning just such a mine in the middle of the Timmins region in Canada. The nickel market should soon turn into a deficit as there will hardly be any growth in supply. As mentioned above, Indonesia and China will limit supply, starting a possible supercycle that occurs every 15 to 20 years. Canada Nickel is fully developing the Timmins Nickel District as it hosts large volume mass tonnage or heap tonnage, open pit nickel sulfide projects that also allow for net zero nickel production and even the sale of CO2 credits. The major investors in Canada Nickel are Agnico Eagle with 11%, Samsung SDI with 8.7%, Anglo American with 7.6%, and the Taikwa Tagamu Nation with 8.4% after conversion. The Crawford project is developed to the point where a construction decision can be made in 2025. It is the second largest nickel reserve and also the second largest nickel resource in the world. The bankable feasibility study shows an NPV at 8% discount of $2.5 billion after tax and an IRR of 17%. If the CO2 credits are added, this rises to $2.6 billion after tax and shows an IRR of 18.3%. The projected mine life is a sensational 41 years. The environmental impact studies have been submitted and the second part of the federal approval process has been reached, with state approvals expected in fall 2025. Project financing is in full swing and the loan commitment of $500 million has already been received from the Export Development Canada Agency as mandated lead arranger, as well as a support commitment of 500 million Canadian dollars from a leading financial institution. 1.5 million tons of CO2 can be stored annually. This means that around 30 tons of CO2 can be stored net per ton of nickel produced. Now, that's what I call green mining, folks. Over 20 ultramafic targets have been consolidated, which are 25 times larger than the 1.6 square kilometers of Crawford. In 2025, a total of 8 additional resources are to be announced by spring 2025, as well as the first from Reed and Deloro. Nickel, stainless steel and alloy steel production is also to be located in Timmins, as it would then be possible to produce net zero metal. This would be North America's largest nickel processing facility and Canada's only major stainless and alloy steel production. We need to free ourselves from dependence on Asia, and Canada Nickel is literally inviting us to do so. The decline in Canada Nickel's share price over the last 6 to 9 months makes absolutely no sense at all. Our point-and-figure chart shows an end to the downward trend, which will quickly turn into a positive trend reversal. We see a great investment opportunity here with an initial upside potential of up to $2 for the share. The company is very cheap and we are very positive about it. You can also find all information on our Commodity TV app in German and English, as well as everything to do with commodities. Please note the disclaimer. The shares discussed are part of the SRC Mining Specialist Situation Certificate, and I'm a shareholder in the company, of course. Thanks for watching us, and bye-bye from Switzerland.